Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are looking at rates and 10-year note yields rising, touching those highs we put in yesterday, but not enough to push through. Market continues to see higher yields. We had mediocre auction at best today in the 10-year, with demand declining from last month's pretty solid 10-year auction, albeit with yields below 3% last month and the highest since June of 2011 this month. So right now, not enough to make new highs. We are still hanging on those highs, though. Market not seeing any kind of retracement back to the old range, still hanging on the highs. And market volatility instead is also on the highs. We are in that 4% range in the 10-year bucket. That is a level we have not seen since June FOMC. And certainly a level we have not seen for a sustained period for quite some time. So right now, market volatility is high, which tends to believe that we're going to continue to break out of this range, or at least trade against the trend, which is sort of the old range. Remember, we talked about 280 to 3%, then we expanded 280 to 310, and ever since then, it's really just been an expanding range. But now you got to actually give in and say that this thing could be on its way to the moon. I think ultimately we saw the market break through 3%. We saw it break through the old high of 312, and now we're kind of waiting to see if we can break through that 325 high. Right now, it seems in the short run we may have tired the market out. And if you look at the positioning side, leverage funds or the hedge funds started to cover some of their shorts, albeit they were the uber max shorts that we get from the trading financial futures data on Fridays, and they started to cover modestly. Let's not go over the boat here and say they're covering running for the doors, but certainly a modest amount of short covering going on last week. I think the idea that we're starting to see the curve steepen a little bit out has a lot of eyebrows raised. How steep can the curve get, and potentially how will that affect what the Fed's doing? And I think ultimately that these position guys have been waiting for this move. Now that they've gotten this move, how much further does it have to go, at least in the short term? So right now, I think the market hanging around that 3.25 10-year yield. Could we see a bust up higher? We didn't see it on the auction today. We do have a 30-year auction tomorrow. That might be enough to push us. But ultimately, to sustain this move, we're going to have to see something coming out of possibly Federal Reserve policy. I think that global growth is going to be another issue. Likewise in Europe, some of the issues going on in the credit world over there are also going to be issues to keep the yields as high as they are here in the Treasury buckets, at least in the short term. So right now, Treasury yields hanging on the high, volatility even higher. But how long can it last? Probably not that long. This is Todd Colvin coming to you from the floor of the CME Group.